Hello everyone. This is the pre-market report video for today, 8th May 2025 for the Indian stock market in terms of Nifty and Bank Nifty. Yesterday early morning when I was recording the video, because of the escalation between India and Pakistan, Gift Nifty dropped all the way down to 24,150. So at that time it was indicating the gap down opening of near 400 points. But the surprising thing is, in the next 1 hour, it recovered most of those losses, and in line with that, Nifty opened 120 points gap down and again immediately recovered all those losses. Then, throughout the session, it traded flat and in fact closed positive above 24,400. Basically, there was an initial panic reaction, but market kind of ignored the conflict as most analysts released the report about the historic conflict influence on the market. For example, City analysts said that previous conflicts have not had any lasting impact on Indian assets, so they are expecting the same this time. Like in 2019, market haven't reacted at all, and if any means it's on the bond market. There too, yield increased 15 basis points in 1 month, but after that it retreated. Similarly, when India and China were having the conflict in June 2020, at that time the impact was only on the Indian rupee, that too like only 1%. So market kind of came to the conclusion that this conflict will not turn into full-fledged one, and the price action also showing the confidence despite the fact Pakistan vowed for the retaliation. In fact, yesterday more number of listed stocks advanced than its declined. The advance regain ratio was 1.68 is to 1. And for the 15th session in a row, FIA was net buyers. Yesterday, they net bought for 2,600 crore rupees, and same for DIA as well. They net bought for 2,400 crore rupees. Moving to derivative market open interest analysis, in the index options, proprietary traders comparatively bought more call options. Hence, their net open interest increased to 2.6% on the bullish side from 1.5% on the Tuesday closing. On the other hand, retail traders holding now net 2.4% on the bearish side. Whereas about FIA, they are maintaining their position, no major change. But as a hedge to this bullish position on the options market, proprietary traders turned super negative on the future market as they increased their short position from 55% to 61%. However, today is not a future market expiry, so we don't need to worry too much about it. So those were the quick takeaway from yesterday's Indian market. Then coming to US market, this S&P 500 graph explains all. I mean, the Fed interest rate decision announcement was at 2 p.m. Eastern time. The moment when Fed paused the interest rate, US market started to fall. Regarding the interest rate, as everyone expected, they kept unchanged. Then the Fed chairman started his press conference at 2:30 p.m., which in turn made the US market crazy volatile, like up and down multiple times. I mean, if Fed chairman talks bad about the inflation in his press conference, it means as per analyst, Fed signaling the slower interest rate cut. Whereas if Fed chairman talks bad about the employment or slowing of economy, then it's a signal for faster interest rate cut. Basically, analysts weigh the airtime in the press conference, like how much airtime Fed chairman talked about the threats to the unemployment and how much airtime he talked about the threat to the inflation. Then from that only they usually call the speech like dovish or hawkish. But the problem on yesterday was he gave roughly equal airtime to both the threats. So that itself clearly telling us that Fed is in waiting mode, and he did acknowledge those facts. I mean, this is what he said, not the exact word, but the context. Due to the uncertainty around tariff and government policy, which in turn increases both the risk, like higher unemployment as well as the higher inflation. So he believes the present interest rate is suitable for both stable employment and to control the inflation. But for future, he said it will be based on the trade deal development and its influence, like which they need to work or to control. Either way, he said Fed has to be agile on their decision to tackle all the challenges. So in short, he was neither dovish nor hawkish, hence the Fed event becomes the non-event. However, White House announced that US Treasury Secretary and US Trade Representative is going to Switzerland today to do the trade negotiations with the Chinese counterparts this week, which provided some support to the US market and made it to close positive. Dow Jones was up by 0.7%, S&P 500 increased by 0.43%, and Nasdaq increased 0.24%. In case of US VIX, it dropped 5% and moved down to the same place as Monday night, around 23.5. Regarding oil, no new news. After the technical bounce, it again dropped near 2% due to the oversupply concerns. So at the time of this video, WTI crude trading around 58 US dollars per barrel and Brent crude trading at 61 US dollars per barrel. In case of Indian ADR, only Wipro closed marginal positive, but all other ADR closed mild negative. Reliance GDR was down near 1.5%, but in Indian market itself, it dropped above 1%, so no fresh price action. If we calculate the arbitrage with the dollar premium, Wipro and Reliance Industries showing some positive bias, whereas the other three ADR showing mild negative bias, not much. However, about Gift Nifty, early morning today, it dropped down and trading at 24,337. Equating that with the spot market, for now, it's indicating the gap down opening of 80 to 100 points. Please note here I'm not saying for sure the gap down opening, rather I'm just conveying what Gift Nifty is telling at present. As time progress, it might change. As a summary, US market closed positive. However, Gift Nifty and Indian areas indicating the negative opening, which is understandable as Pakistan mentioned that they will retaliate, and in the Indian border they have been continuously shelling. Will they? Only time has to say. Then, as per stock open interest, Asian Paints, Punjab National Bank, ITC, Adani Green, HAL, and IndusInd Bank are some of the stocks that got an increased open interest with a negative close, indicates the short build-up. On the other hand, it's Paytm, Apollo Tyre, Biocon, MRF, Delivery, Tata Chemical, and Bank of India are some of the stocks that got an increased open interest with a positive price close, which means these stocks got the long build-up. Then about the things to look out. Today, L&T, Asian Paints, Britannia Industries, Bharat Forge, Biocon, Escorts, Union Bank of India and Canada Bank are some of the major Indian companies' earnings results are scheduled released today. In terms of macro, early morning before our market opening, last Japanese monetary policy meeting minutes is due. Then during our market hours, Germany's industrial production growth is due at around 12:30 p.m. And in the aftermarket hours in the evening, UK interest rate decision is due. And in the night for US, weekly jobs data, 30-year bond auction are some of the important macro we need to keep an eye out today. Coming to technical, as we discussed earlier, Nifty opened 150 points gap down but closed near flat above 24,400. Thus, on the daily chart, Nifty formed a bullish candlestick pattern with consistently sustaining above all key moving averages and further expansion in the Bollinger Band, so all signaling a positive bias. However, now MACD line is showing slight downward bend, hence a decisive breakout above 24,550 could potentially trigger a rally towards 24,700 to 24,800 zone. On the downside, immediate support is at 24,200. A break below this level may extend the correction towards 24,000. In case of Bank Nifty, it also opened 250 points gap down and broke below 54,000 mark. However, recovery during the day helped it to close at 54,610. Thus, on the daily chart, Bank Nifty formed a long bullish candlestick pattern, and again it also trading well above all key moving averages, even though it has been forming a lower high lower low formation over the past few sessions. As per the weekly options data, the maximum call option open interest was at 24,500 strike, followed by 24,400 and 25,000, with maximum new call option rating at 24,400 strike, and then 24,700 and 24,350. On the put side, the maximum open interest was at 24,300 strike, followed by 24,400 and 24,000, with maximum new put option rating at 24,300 strike, and then 24,350 and 23,500. Thus, from options data, Nifty might trade within the range of 24,000 to 24,500 in the short term. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so that it will help me with the YouTube algorithm and also motivate me to do more. Please don't make any investigation based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.